Welcome to the Deep Dive, your shortcut to being well-informed. Today, we're plunging into, well, the pretty fascinating world of Bitcoin, especially given its recent, really historic surge past $108,000 just this July 2025. I mean, that's a clear confirmation of a powerful bull cycle.
Oh, absolutely. No doubt about that.
But the immediate question, the one everyone seems to be asking, isn't really how it got there anymore. It's what happens next? Are we looking at a sharp correction coming? Or maybe just some sideways consolidation? Or, could new, even higher peaks be just around the corner?
That's the core question.
Yeah, that's really the central mission for our deep dive today, isn't it?
Precisely. We've gone through quite a stack of sources, everything from detailed technical analyses, the broader fundamental drivers looking back at historical market cycles, and of course what the various experts are projecting. The aim is to pull out the most important nuggets of knowledge for you. Cut through some of the noise and hopefully provide a clearer, maybe more nuanced picture of Bitcoin's immediate future.
Okay, let's unpack this then. I'm just fascinated by the sheer momentum we saw. What do our sources really point to as the primary forces that actually pushed it past $108,000? So that felt like a really big move.
It certainly did. And our sources, they pretty consistently highlight three major forces at play. First, there's the escalating institutional adoption. But here's where it gets interesting. It's not just the usual hedge fund suspects anymore. We're seeing a pretty significant shift. More conservative institutions, even reports of some sovereign wealth funds, starting to allocate, maybe a small percentage, but still allocating treasury funds to Bitcoin.
Wow. Okay, so that signals a different kind of market foundation compared to before.
Exactly. Deeper, potentially less volatile than in previous cycles. Second factor, the 2024 halving event. And the key insight here isn't just, oh, the supply got cut. It's how that post-halving supply shock seems to be amplified this time around. Amplified by this persistent, large-scale institutional demand. Some sources are even calling it a liquidity vacuum, which could lead to more aggressive price jumps.
A liquidity vacuum. Interesting.
And third, just a generally favorable macroeconomic environment, right? There's this broad anticipation of interest rate cuts globally, which tends to help assets like Bitcoin.
Right. Makes risk on assets more attractive.
Precisely.
So, okay, we've hit this new high. Now, what's our core mission analyzing what happens after $108,000? And what are those big picture scenarios the sources are sketching out?
Well, the mission is sort of multifaceted. We need to identify the critical support and resistance levels, the technical stuff, then really dissect the factors that could push this rally higher or, put the brakes on it. We're looking at projecting potential future price targets and, crucially, discussing the main challenges Bitcoin might face in the second half of 2025. And when you synthesize all those projections, three main scenarios tend to emerge for the short to medium term.
Okay, walk us through those scenarios. Is there any sense of probability attached to them? And maybe what's the first sign we might look for that points us down one path versus another?
Good question. So the optimistic goal some sources point to is a push towards, say, $150,000, maybe even $200,000. Now, that's highly contingent on that institutional demand continuing strong and getting a real surge in retail FOMO, the fear of missing out.
Okay, and the signal for that?
The early signal would likely be a rapid, high-volume break above $110,000 without much looking back, minimal retests. Then you have the base scenario. This suggests more of a consolidation period, price likely oscillating maybe between $85,000 and $120,000 before any potential next major upward push.
That sounds like the most maybe expected outcome, a breather.
It's what many analysts anticipate, a sort of healthy digestion of the recent big gains. The signal there would be price finding solid support around the $100,000 or maybe $95,000 level. It holds there.
Got it. And the downside? The worst case.
Right, the worst case scenario. That involves a stronger correction, potentially down to the $65,000 to $75,000 range. This path would likely be triggered by something significant, maybe negative macroeconomic news, a major regulatory clampdown, or perhaps a critical security issue emerging.
And the warning sign for that?
A decisive break below $95,000, especially if it's on heavy trading volume. That would be a major red flag for the bulls.
Okay, that gives us a good framework. To really understand where we might go, let's dig into those underlying currents. What are the technicals telling us right now? Those specific levels and indicators.
Okay, from a technical standpoint, the immediate hurdle is definitely that $110,000 resistance level. A clear, sustained move above that, like we said, could accelerate things maybe towards $120,000 fairly quickly.
And on the downside, the support levels.
We've got some pretty solid support zones to watch. First, there's the big psychological $100,000 mark.
Always important, those round numbers.
They really are, but
Yeah.
technically, perhaps even more significant is $95,000. That level lines up closely with the 200-day moving average.
Ah, okay. And that's been important.
Very important. It's acted as a kind of dynamic support throughout this whole bull run. So a clean break below 95K, especially on high volume, that would be a strong signal for potentially a deeper, more prolonged correction.
Okay. What about indicators like RSI or volume?
Right. We also look at indicators like the relative strength index, the RSI. Usually an RSI reading over 70 signals, overbought conditions, maybe suggesting a pullback is due. But what's interesting is some sources are highlighting subtle bearish divergences.
What does that mean exactly?
It means the price is making new highs, but the RSI indicator isn't making corresponding new highs. It suggests the underlying momentum might be weakening, even as the price pushes up.
Interesting. So less strength behind the move than the price suggests.
Potentially, yes. And of course, trading volume is key. A significant decline in volume during a price rise can suggest a loss of conviction that maybe the rally is running out of steam.
That RSI divergence point is really insightful, actually. Okay, let's shift from the charts a bit. Let's talk about those deeper currents, the fundamental factors. What are the really big drivers shaping Bitcoin's journey right now, for better or worse?
Fundamentally, number one is still institutional adoption. It remains paramount. And like we touched on, it's not just the US Bitcoin ETFs, which get a lot of headlines. We're also seeing expanding interest, new products launching in Europe, in Asia. It's becoming more global.
So the base of buyers is broadening geographically, too.
Exactly. Then there's regulation. It's slowly providing clearer rules of the road. You've got MiCA, the markets and crypto assets regulation in Europe. That's a comprehensive framework, and that generally fosters more confidence.
Right. Clarity helps institutions get comfortable.
Definitely. And similarly, things like evolving tax treatment in the U.S., while maybe complex, are signs of legitimization, encouraging broader participation. Then the macroeconomic picture, those anticipated FED interest rate cuts later in 2025, they're generally seen as a tailwind, making risk assets like Bitcoin more attractive relative to, say, bonds.
And the inflation hedge argument, is that still relevant?
It seems to be resurfacing, yes. If global inflation picks up again unexpectedly, Bitcoin could benefit as investors look for alternatives. And finally, don't forget technology. Layer 2 solutions like the Lightning Network, they're making Bitcoin transactions faster, cheaper, more practical. And we are seeing broader adoption, slowly but surely, of Bitcoin as an actual means of payment, not just an investment.
It's always useful, I find, to connect the present moment to the past, get some context. How does this current situation feel, based on the sources, compared to Bitcoin's previous big bull cycles? Are the potential corrections likely to be just as severe, or something fundamentally different this time?
That's a really crucial comparison to make. Let's look back. In 2017, after Bitcoin hit its then all-time high, which was around $20,000, it then experienced a correction of roughly 40%.
Okay, and 2021?
In 2021, after peaking around $69,000, the correction was actually steeper, closer to 55%.
Wow, okay, so applying that logic to now.
Well, if we saw a similar, say, 30 to 40% drop from the recent highs around 108K, that could potentially bring Bitcoin back down into that $65,000 to $75,000 range we mentioned earlier.
Which lines up with the worst-case scenario.
It does, however, and this is a big however, our sources emphasize, the key difference this cycle is the unprecedented level of institutional support and capital inflow. This stronger backing, particularly from entities likely to be long-term holders, might very well cushion the blow.
Meaning any correction might be less severe or quicker.
Potentially both. Less severe and maybe quicker to rebound compared to past cycles, which were much more heavily driven by retail speculation.
Right. The hot money perhaps isn't as dominant this time.
That seems to be the argument, yes.
Okay. So we've looked at the charts, the fundamentals, the history. What does this all boil down to when we look at what the leading experts are actually saying about Bitcoin's future? Is there a consensus building, or are we seeing significant splits in opinion?
It's actually a fascinating mix of views out there. No clear consensus, really. On the strongly bullish side, you still have analysts like Plan B, his stock-to-flow model, the S2F model.
Right, the one based on scarcity.
Exactly. That model still maintains a projection of, I believe, $250,000 or even higher for this particular cycle. And then you have Kathy Wood of ARK Invest, who famously continues to suggest Bitcoin could, in the very long term, surpass $1 million per coin, driven by mass global adoption.
So some very high targets still out there.
Definitely. But then you have the more neutral or cautious analysts. They're not necessarily bearish, but they anticipate perhaps a significant phase of accumulation first. They suggest maybe a period of sideways trading, letting the market digest these big gains.
Like that base scenario we talked about.
Precisely, letting investors reassess the landscape before committing to another major leg up.
So, a bit of a pause before potentially resuming the climb.
That's the thinking from that camp, yes. So if we try to bring all these different threads together, our sources do offer some reasonably clear conclusions across different time horizons. In the short term, thinking July, maybe August 2025, there seems to be a high probability of either consolidation or perhaps a moderate correction, price most likely settling somewhere in that, say, $85,000 to $100,000 range for a bit.
Okay, the immediate future looks maybe a bit choppy or sideways.
That seems likely. For the medium term, looking out towards the end of 2025, a new impulse, a push towards that $150,000 level is considered quite possible if...
The big if.
Yeah, if those fundamental factors we discussed remain supportive, and critically, if that institutional demand shows no signs of drying up.
And longer term, into 2026.
Looking further out into 2026, the thinking is the current bull cycle could potentially extend even further. Again, contingent on institutional and retail adoption continuing to grow, really solidifying Bitcoin's place as a macro asset.
That's a pretty compelling potential roadmap. But, no journey, especially in crypto, is ever smooth. What could potentially throw a wrench in the works here? What are the big challenges and risks that could derail this?
Yeah, absolutely critical to consider the risks. Our sources highlight several key challenges. Adverse regulation is, well, it's always a potential risk looming. And it's not just about outright bans, which seem less likely in major economies now. It could be more subtle things.
Like what?
Like increased capital requirements for banks holding crypto assets. That could dampen institutional appetite significantly, impacting liquidity.
Okay, so regulatory headwinds, even if not direct bans.
Exactly. Then there's the competition from central bank digital currencies, CBDCs. Now, they aren't a direct competitor in terms of decentralization or ethos.
Right, they're the opposite in many ways.
Correct. But their widespread adoption could potentially limit the space available for the organic, broader adoption of decentralized cryptocurrencies like Bitcoin for everyday payments, for example.
Interesting angle. What else?
Yeah. Well, you always have to account for black swan events. Those completely unforeseen crises could be geopolitical instability flaring up, the collapse of a major crypto exchange creating contagion, or, a critical security failure discovered within the Bitcoin protocol itself, or a major related service. Highly unlikely, but possible.
The low probability, high impact stuff.
Precisely.
Thanks.
And finally, there's just the possibility of market saturation, a point where the price could stagnate if that institutional interest starts to wane, or if new capital inflows simply don't keep pace with the selling pressure from existing holders taking profits.
So a potential plateau if the buying pressure eases off.
Yes, that's a risk too.
Okay, bringing this all together then, what does this deep dive actually mean for you, the listener? If you're someone looking at this space, maybe you're a long-term holder, maybe an active trader, maybe you're totally new, and just curious, how can you apply these insights?
Yeah, our sources offer some pretty practical guidance, depending on your perspective. For long-term holders, the general recommendation seems to be maintain your positions. Understand that this kind of volatility is just part of the deal with Bitcoin. They might even view significant price corrections, if they happen, as potential opportunities to accumulate more, assuming it aligns with their long-term thesis.
So HODL and maybe buy the dips for that.
Essentially, yes, if they have the conviction. For traders, the advice is a bit different. Focus on operating within that identified range, perhaps the $85,000 to $120,000 zone we discussed. But critically, use clearly defined stop-loss orders to manage risk effectively. Volatility cuts both ways.
Makes sense. And for the newcomers?
For new investors, the suggestion is generally to exercise caution. Don't just jump in because of FOMO. Maybe wait for clearer confirmation of those support levels holding before making an initial entry. Don't chase sharp, sudden upward spikes.
So be patient. Look for stability before committing capital.
That seems to be the prudent approach highlighted.
Well, Bitcoin undeniably remains the king of the crypto space, doesn't it? But July 2025 is really shaping up to be a truly pivotal month. for figuring out its immediate direction? Are we genuinely on the cusp of blasting off to new all-time highs, really powered this time by that deep institutional conviction?
Hmm.
Or should we be bracing for maybe a more prolonged correction, a period where even the sophisticated money decides to pause and wait? It's really a question that keeps the entire market on its toes, I think, and it really challenges our assumptions about what different this time actually means in practice.
It really does. And hopefully this discussion has given you some frameworks to think about that. What specific aspects of this deep dive really stood out to you? Or maybe what further questions has this analysis sparked for your own exploration? We'd encourage you, keep digging, keep learning, and definitely keep asking those important questions as this all unfolds.